Hello, everyone. My name is Lucian. Most of you know me from Twitter as Triangle Investor. In today's edition of CEO and Market Expert Interviews, I am delighted to host once again a resource investing legend, a speculator, contrarian, a banker, and much more. Mr. Rick Rule, welcome back to the show.
Always a pleasure. I enjoy these sessions. Thank you for having me back.
Thanks, Rick. As you say, no crypto, no pet stocks, no tech stocks. When you are ranking stocks from the people who are reaching out to you on your website, Rule Investment Media, I will say no gold, no silver, no economy, no dollar. On this interview, let's do an interview with just only one topic, and that is my favorite, and I believe that is your favorite also, uranium. Are you okay with that?
You know your audience better than I, sir. So I don't script these interviews. They're your audience. Let's do what you think they're interested in.
Okay, Rick. Uranium spot price up big time. We are getting more and more information about how tight is uranium market now. Everything pointing to a perfect storm for uranium, but uranium equities are not excited as physical uranium market. They are not moving up or moving up very little. Why is that, Rick?
I think in the case of some of the smaller uranium companies, the market is understanding that the internal dynamics in the uranium market are favoring the big companies, not the small companies. We can talk about why later. I think you're also seeing a class of speculator, like myself, who has enjoyed 200 and 300 and 400% moves in their uranium juniors, and they're locking in profit. I have, in the last 6 weeks, sold enough of my junior portfolio that I've recouped all the capital that I have invested in them, and I've sold enough to, on top of that, pay the capital gains tax, which is to say, for the tertiary part of my portfolio, I'm at what I call the point of no concern. I've recouped all my capital. I'm hanging on to the rest. I mean, I believe that the easy money has been made in uranium. I think it's likely that the big money is in front of us. I have not sold my Kazatomprom. I have not sold my Cameco. I have not sold my NexGen. I have not sold my Fission. And I have not sold my Sprott Physical Uranium Trust. There will come a time in the market, I think, if past markets are prologue, that the more speculative part of the market will outpace the bigger part of the market. But right now, we're in a circumstance where I think the structure of the market and the structure of both the equities market and the physical market is better for the big companies or the bigger developers. We can talk about why if you want, or you can ask the questions and I can be led by you. I mean, this is a conversation I can have any way you'd like to have it.
Definitely expand a little bit on that. Definitely, please.
Well, the first thing is that you haven't seen the generalist money come into uranium yet. You are seeing an atmosphere conducive to it, but you haven't seen the generalist funds come into uranium. When they do, they come into the biggest name. They come into Cameco. They come into a New York Stock Exchange listed name. They come into an investment grade credit. They don't come into $200 million market caps in countries that the fund managers can't pronounce. That's the way it works.
Yeah.
But the second thing is that there are structural reasons in the uranium market now to favor the bigger companies. The first is that while the price of uranium is high enough to incent new production, it's important to note that the volume in the uranium market has switched from the spot market to the term market. And the fact that it goes to the term market creates very unusual opportunities for people with existing production. It means that they can enter into 7-year, 10-year, 15-year term contracts with investment grade counterparties that locks in their revenue and most of their margin on the production that they hope to bring to market for the next 10 to 15 years. The juniors don't have the ability, because they aren't credit counterparties, to enter into these contracts without credit enhancement. So Cameco or Kazatomprom can enter into a 15-year supply agreement with a $75 counterpoint, a $70 minimum sales price, and a market escalated topside sales price for as much as 70% of their production. By entering into forward sales contracts, term contracts with their existing production, they can pre-sell their new production and lock in both their ability to amortize their debt and a reasonable return on capital employed. This in turn gives equity analysts much more visibility into the future cash flows and the probability of net present values around these companies. This is available to CGN, to Cameco, to Kazatomprom, and to very few others. So I think it's important to understand the importance of the volumes available in the term market and the advantage this gives incumbent producers. Another thing is important, I think, for your listeners to understand if they want to know too much about uranium.
Yeah.
Increasingly, when you build a nuclear power plant, and they're being built all around the world, these are very capital-intensive plants, and the developers tend to borrow between 2/3 and 3/4 of the development cost, particularly the Chinese developers. Increasingly, the lenders are looking at these development risks, and they are requiring the plant operators to obtain enough fuel to amortize 60 or 70% of the loan over 15 years, which means if you're building a new modern scale nuclear power plant, let's say China, a gigawatt or gigawatt and a half plant that's going to burn 1.5 million or 2 million pounds of uranium a year, and you're spending $8 billion building this plant, you're borrowing $5.5 billion of it. The lender is requiring you to secure the fuel now for the next 15 years, long enough to amortize the loan. And they don't care too much about the price. An $8 billion plant is probably suffering $400 million a year in depreciation. Just the depreciation expense of $400 million. Compare that with $2 million worth of fuel, 2 million pounds worth of fuel, $150 million. Do you care, really, if you're the lender, whether that fuel is $75 a pound or $100 a pound? You don't care at all. The difference in the fuel cost isn't enough to amortize the carpet expense.
Yeah, yeah.
And that's a very, very, very important dynamic that investors need to understand investing in uranium. When the momentum is established by the generalist investors coming into uranium and the certainty involved in the incumbent producers, first of all, increasing their production substantially, in the case of Cameco and Kazatomprom, by as much as 50%, while getting price certainty and margin certainty over as much as 70% of their production looking forward 15 years. The certainty of that, with the influx of generalist investors into the market, gives, at this period in time in the market, a really strong advantage to incumbent producers. When the incumbent producers establish the momentum in equity markets, and as the narrative becomes more well spread, and as the market's positive experience with uranium makes the market more bold, then you will see the buying pressure come down the market cap spectrum. You will also potentially see a circumstance where the cost of capital for the incumbent producers gets so low relative to the cost of capital for the junior producers and the developers that the seniors take over the juniors to eliminate the cost of capital arbitrage.
Great explanation, Rick. That said, are you buying uranium equities at the current levels, and have you participated and managed any private placement in the uranium companies recently?
I haven't been able to see any private placements in the last 3 months that I thought were intelligently priced.
Mm-hmm.
And I need to say, with regards to the level of companies below NexGen and Fission, I haven't been a buyer. I am doing reviews on both Lotus and Paladin to determine whether the capital costs associated with their feasibilities are low enough that they could acquire credit enhancement so that they, with the help of an insurance company or a commodity trader, could access term markets and thereby synthetically enjoy the advantage that the incumbent producers enjoy. But until I'm able to determine that, I'm not able to pay up for them to the extent that I could pay up for a Cameco or a Kazatomprom.
Okay. But Rick, I'm curious, when you are doing a private placement, are the companies approaching you or you approach the companies?
A year and a half ago, the companies would approach me because I was the only guy writing checks.
Yeah, I mean today.
No, today, absolutely not. There's a whole class of speculators out there that wants to be in the uranium business because the uranium price has gone up. The uranium juniors are now price takers, not price makers. When I'm a private placement writer, I prefer to be the price maker.
Fair enough. We saw the news yesterday where Cameco has signed the uranium supply agreement, sorry, with China Nuclear International Corporation, that is a subsidiary of China National Nuclear Corporation, CNNC, one of the country's largest nuclear power operators. How do you see that news? I mean, my main question is, do you believe that Chinese are locking up supply much better, faster, and smarter than the West utilities?
They have to. The Chinese are building nuclear power plants like mad. Yeah. The Chinese government, through the Chinese banks, are willing to finance the construction of nuclear power plants.
Yes.
But the Chinese government understands the arithmetic around uranium supply. We have an ugly supply deficit, and 46 million pounds of the supply that we have is controlled by Sprott, who is not going to sell it. If you talk about building 20 plants at $8 billion a plant, what's that, $160 billion? Mm. The Chinese government has to have the producers lock in enough supply that they can amortize that 160, $180 billion of capital expense. Yeah. This is wonderful for Cameco, and this is wonderful for China. Yeah. This is truly one of those circumstances where everybody comes out ahead. The people who don't come out ahead are people who have to compete with the Chinese for uranium supply in the out years. The Chinese government has an extremely strategic outlook as to energy security for China. And whether you like it or not, they have a society where 10,000 people make the decisions for 1.4 billion people, which is to say, the not necessarily willing counterparty around these supply agreements are 1.3, $1.4 billion Chinese, who have no excuse, no choice but to, in effect, countersign the obligation.
Yeah, spot on. Rick, the White House included $2.2 billion for low-enriched uranium and high-assay low-enriched uranium procurement in the list of founding priorities for critical domestic needs sent to U.S. Congress this week. Do you see that as a signal for Russian uranium ban? I mean, is it even realistic for the West to stop relying on the Russian uranium fuel?
It is not realistic. Yeah. Despite the well-publicized tensions between the United States and Russia, American imports of uranium, including low-enriched and high-enriched uranium last year, doubled. We're allegedly at war, and our imports doubled. If you assume that Congress allocated this money today, permitting financing and building sufficient enrichment uranium enrichment capacity in the United States to replace Russian enrichment. The last time I looked, it was sort of 56% of the world's capacity. Isn't tenable within a decade. You're fairly familiar with American politics. Let's think about a location in the United States where you could permit a grassroots enrichment facility. Let's think too about permitting the tailings facility around the waste from that enrichment plant. Other than perhaps Blanding, Utah, perhaps the United States would site their whole uranium enrichment facility at Blanding, Utah, and take advantage of the 20 million tons of permitted tails there. Other than that, I don't see the ability to allocate that capital, to use the capital in the 10-year time frame.
Rick, what about Kazatomprom? I know that you like them for numerous reasons, and I get it. But do you believe they are a risk play? And what are your thoughts about, let's call it, rotation in the upper management of the company?
The rotation, not just in the upper management, but also in the middle management, is troubling to me. One of the things I liked about Cameco is I regarded the younger managers, both in upper and middle management, as being the highest quality group of people relative to market cap in the industry. Unfortunately, there seems to be a political dispute in Cameco that is being won by the old Soviet era aparchiks, something that I consider to be a real risk. And I think that, well, I haven't sold any Cameco, but pardon me, any Kazatomprom. Although it is a much better company than Cameco, I am favoring Cameco in the market in the near term. I don't think that you are going to see many Western money managers, generalists, that want to take the career risk associated with Cameco, despite the fact that from a financial viewpoint, it's a better company. I also think that Kazatomprom, pardon me, will have related cost of capital challenges relative to Cameco, because I think it'll be difficult for Kazatomprom to access the cost of capital for new projects that Cameco enjoys, and probably also to enjoy secured counterparty arrangements, although they may be able to do that with the Chinese.
Rick, what about your updated thoughts about current situation in Niger? What do you think about the current situation in Niger and the companies operating there? And I know you have them in your portfolio, Goviex and Global Atomic. How do you think this will unfold?
I suspect that Goviex and Global Atomic are not financeable until we've had more experience on the ground with the government. The government has gone to some length to assure, pardon me, Western financial institutions that they will be a better counterparty than the prior government. They have pointed out their allegation, I won't substantiate or deny this, that there will be less corruption in Niger and that there will be better security in Niger. What hasn't been established is the fiscal arrangement. It hasn't been established as to what degree sanctions will take place and what the cost of capital around projects in Niger will be. And in the absence of the ability to obtain financing, you won't see project starts with either of these companies. So what that means is that you have to risk adjust net present values, and you also have to delay the start. Everybody had expected groundbreaking, at least on Global Atomic, in 2024. Now it's probably more realistic to look at 2026, and it becomes an if, not a when.
What about the rest of Africa for uranium? Yes or no? I mean, if so, which country? I believe that Namibia is definitely a yes. But what other countries?
Namibia is an absolute yes. Namibia has come to the conclusion, not merely in terms of the government, but also in terms of the people, that foreign investors need to be treated fairly. What's nice about Namibia is they tell you up front what they're going to do to you.
Yeah.
The Namibians take the point of view correctly that they own the resource. And rather than saying, you develop it and tell us what you're going to give us, they say, if you'd like to develop it, here's what we're going to take. Take it or leave it. A wonderful circumstance. Namibia is a country I like. I'm attracted, frankly, to the progress of all of Africa, coups notwithstanding. Rapidly increasing middle classes, rapidly increasing sophistication around the political classes. I'm also attracted to the coming realization in Australia that despite their historic opposition to uranium, that as a choice of fuel, it's preferable to other forms of energy which they sell, including coal. And I think that you will begin to see, I think you're seeing a loosening of the anti-uranium stance in Australia. I think too, not that it matters on a world scale, but I think that you have the ability in the United States to return at least Wyoming and Texas to production. This isn't going to matter from a global viewpoint. The United States at max production may be 10 million pounds. But it does matter to companies that are interested in developing American projects. Those were, with the possible exception of South Texas, often unbuildable. Now, I wouldn't hesitate personally to put money anywhere in Wyoming or anywhere in Texas. And I noticed too, that although the Biden administration has put the Kaiparowits in the Grand Canyon out of reach,
Yeah.
that there are increasingly positive noises coming out of the Navajo First Nation, which would allow both Navajo lands to be developed, but would also change the political equation around New Mexico uranium production.
Yeah, that could be the case. I agree. Rick, do you think we might reach similar company valuations? I mean, in the terms of value of pounds in the ground, as in 2007. The median valuation was around $8 per pound back then, while now we are much lower, currently below $2, $1.8. Can we reach similar valuations like in 2007?
My hope before I die, I'm 70 years of age now,
Yeah.
is to eliminate the rule of thumb around dollars per in situ pound. The dollar for in situ pound doesn't take into account the cash flow from those pounds. It doesn't take into account when it's produced,
Yes.
how much it costs to develop it, or what it costs to produce. The idea that a low-grade pound in the middle of Congo is worth the same as a high-grade pound in Saskatchewan is ridiculous, but the pound in the ground valuation trick continues. My suspicion is, and it's just a suspicion, I wouldn't speculate based on it, my suspicion is that the tail end of this bull market doesn't get as stupid as the tail end of that bull market, but it gets plenty stupid compared to now. I believe, with regards to the uranium juniors, that the easy money has been made. The arbitrage between a sector being hated, which it was in 2022, 2021, and a market that enjoys now the absence of hate as opposed to the presence of love. That's the easiest arbitrage of all times, and that's already taken place. It's off the table. We go into a reality phase now. Once the narrative is established by the progress of the senior producers, you will see the market extend once again to the developers, to the juniors, and ultimately to the pretenders. That is to say, the big money is likely to come the easy money has been made.
Okay.
There is real money to be made between the easy money and the big money.
Mm-hmm.
And you're in that period today.
Rick, what about exit strategy? When do you plan, let's say, to sell your uranium stocks? I know that you have a metric when 25 juniors turn into 600, but what other things are you looking for, looking when exiting?
Well, first of all, it's important to note I've already done it with my juniors. I've already reached the point of no concern. I've sold enough that I have no net investment in them.
Mm-hmm.
I have a carried interest. I will likely begin to sell my uranium stocks too early. I will likely begin to sell them when I see credit terms extended to uranium miners that are illogical from a lender's viewpoint, and when I see that illogical narrative extended to the speculative juniors.
Mm-hmm. Okay.
I don't know what price that'll be. I don't know if we'll be in a recession then. I don't know what the interest rates will be. I don't know what competing uses of capital I'll see. $75 today is enough to incent new production today. It's certainly enough to incent the restart of Cameco's shut-in production, of Kazatomprom's shut-in production. It is certainly enough to incent the production of NexGen and Fission, which I consider to be one province. It's enough to restart the Malawian production, Namibian, Botswana, that production. When I see prices that are high enough to incent second-tier deposits around the world, and I see them being built, then I'll know that the market is fairly priced. And when I see the semblance of stupidity that I saw beginning in 2008, I'll know it's time to take my leave even from the best of the best.
Fair enough, Rick. Fair enough. Let's move to the part of our interview which people love to hear from you, and that is we will cover some uranium companies where you will say, if you don't mind, if you own them and what is your rationale for owning them. Of course, you can skip the ones you don't know much about or you don't want to comment. Okay?
Yes, sir.
Let's start with NexGen.
I own NexGen. When I run a net present value on that deposit at $75, let alone $100, there's a lot of room in that deposit. And if I pro forma add fission to that, which means you build them at once, and you save $600 million in duplicate expense, you have the best undeveloped deposit in the world, not held by a uranium major.
Mm-hmm.
I make the assumption that the cost of capital of that deposit built by NexGen will be substantially higher than the cost of capital for that deposit if it was built by Cameco, BHP, Rio, or Teck, the four likely acquirers. And so I assume that NexGen will be taken over rather than build a deposit themselves. People who disagree with that assumption shouldn't own NexGen.
Yeah, good point. What about F3 uranium?
I'm sorry?
F3 uranium.
I don't own it. I've exited the tertiary uranium stocks. Great people, interesting discovery. I believe that there are other parts of the value chain that offer better risk to reward. I don't think that you're going to see the tertiary stocks move until you have seen the path higher demonstrated by higher quality companies.
Mm-hmm. Mm-hmm. Similar story, Baselode Energy.
I don't own Baselode. In terms of my uranium stock, well, in terms of all my stocks, a mid-size or a small high probability deposit is of less interest to me than a large deposit. What I've learned in my life, painfully, by the way, is that everything that could go wrong with a big mine can go wrong with a small mine, but a small mine can never make you big money. So I want a deposit that has the potential to be a tier one deposit, which is to say a deposit with $10 billion in situ recoverable reserves, a deposit that would be on the lowest cash cost quartile in the world and the best return on capital employed in the world. I don't own stocks because I think they're going to go up anymore. I own stocks that are selling at a discount to what I think they're likely to become worth. Important contradiction.
Okay, what about energy fuels?
I own energy fuels. I own it because I think their cost of capital will be anomalously low, given the geostrategic position that the United States unfortunately enjoys with regards to uranium. I also think that the blanding asset in terms of permitted tailings is an asset that the market undervalues.
Rick, Mega Uranium.
Mega?
Yeah.
Yeah, I own Mega. It's it's a closed-end fund that trades at a discount. And I like discounts. So I own it. I don't see any catalyst in Mega. I just see it as being the cheapest of all of them in terms of the difference between the value of the sum of the parts and the price of the whole.
Okay. Fission?
Fission I own. I'm making the decision that the market is rational and Fission is taken over in conjunction with NexGen or merges ahead of time. When I run pricing matrices on net present values, my base case is 60. My mid case is today's price, the term price, which is 75, and my upside case is 100. The combined deposit, NexGen Fission, is a showstopper.
Rick, what about interesting company? It's not solely uranium, Power Metal Resources.
Power Metal isn't a uranium company. It is a play on a very skilled team of merchant bankers who have the ability to capitalize on the private to public arbitrage. A group of assets that are illiquid, that doesn't have a management team wrapped around them, has private market values that are basically liquidation values. If you package those and take them public, it's not uncommon for the valuations to quadruple or quintuple. The ability of a company to manage that process 2 or 3 times a year is a different style of speculation, one that I enjoy. It isn't one for the faint of heart. This isn't one that somebody who is using money that they can't afford to lose some of, and one does people don't have a 5-year orientation so that you could allow the compounding of that magic to occur. Those type of people shouldn't own that stock. For somebody like me, who used to do it, who understands the process, but is too old and too lazy to do it for himself, it's a wonderful speculation.
Okay, what about Denison Mines?
I think that uranium speculators have to own Denison.
Agreed.
Your risk there is that they're betting a lot of the company on a technology that I believe is unproven. That is to say, at depth in situ recovery. In situ recovery normally works in surface horizons on roll front sandstone deposits. They're trying something very, very different. If it works, it's a long ball run. I note that this company has long experience, 60 years of experience in the Athabasca Basin, which is in effect the Persian Gulf of the uranium business. They have, some people would say 2, some people would say 3 indicated discoveries. And they have equity interest in a permitted operating mill, which I think is worth something. Your risk is that their technology doesn't
work. 2 more. Boss Resources.
Boss has been a spectacular success for me. I have sold enough to recoup all my cost, not because I'm disappointed with Boss, simply because it gave me so much so fast. Uh, so I've reduced my position in Boss. The rest of my position is not for sale. They have executed. I know the deposit well. I've been around the deposit for a very, very, very long time. I'm looking for on time, on budget nameplate capacity coming into the sweet part of the uranium curve. They will not be able to execute long-term contracts, but they will be able to execute term contracts. I don't know if they're acquire ors or if they're acquire e's, but the future is well laid out in front of them. Their timing was spectacular, and their execution was spectacular too.
Yeah, and what about Peninsula?
I'm sorry?
Peninsula.
Don't know enough to comment.
Okay. I have a few, not few, I have a lot of questions from my followers. So if we can cover them, that would be great. Are you ready?
Yes, sir.
Okay, first question. What do you think about ISO Energy and Consolidated Uranium merger?
I think it's great. The industry has, the junior part of the industry, too little scale, and they have too much management, general and administrative expense. If you put more assets under administration and you reduce the G&A relative to the total assets, you reduce the dilution that takes place between now and the time you go into production. High quality assets, high quality people. Importantly, as you add market cap, you increase the probability of inclusion into junior equity indexes, which means that you get free buying, you get index and passive buying. So for all of those reasons, I think the merger is fantastic.
Okay. Second question is, you have a winning relationship with John Borshoff and Paladin. Do you see him taking over the region to form a bigger company?
I hope so. You have seen John complete one merger. It may be that he has waited too long to consolidate more of the sector. He has done a wonderful job adding value organically, which is different than doing it in capital markets. But I think that the market's expectation of John's competence is high enough that he will enjoy a lower cost of capital or a higher share price than other juniors, which will continue to give him a durable competitive advantage in mergers and acquisition, if that's what he chooses to do.
You already answered the part of the next question, but I will ask it nevertheless. You said that the easy money in uranium sector has already been made. Does that mean that you don't see too much upside from here?
No, I think I explained that.
Yeah,
I think the easy money has been made. The real money gets made now, and the big money gets made when it gets stupid. We have seen the change in outlook for uranium go from both a $40 spot price to a $75 term price. That's an enormous difference. You have seen, too, the uranium juniors go from aided to being tolerated. That's an enormous difference. Those two things aren't going to happen again. They've already happened. And so you've seen the share prices of a whole bunch of juniors triple and quadruple. They need to digest those gains. The market now has factored in $75 prices. And the advantage of $75 term doesn't extend to the juniors because they can't get term contracts because they're not credit counterparties. So now you have to employ fundamental analysis and revalue those assets where lower cost of capital around credit quality issues and the ability to monetize term contracts works its way through the net present values. Those net present values were established using yesterday's parameters as opposed to today's parameters. I think over a year and a half, that will lead to a robust, real bull market in uranium. And that will give way to a speculative bull market in uranium. So you had easy money, now you have real money, and at the end you have big money.
Yeah. Next one is if without new mine the supply will run bare, then why hasn't long-term contracting rates out in 2030 and beyond already got to where the incentive price needs to be for the new supply, like between 90 and the 130 range, $30
It's
range?
important to note. It's important to note that certainty around pricing hasn't been established until literally 3 or 4 months ago. You need sufficient volumes to be contracted in the term market in order for those volumes to be respected in construction finance. Meanwhile, you need to permit and build these deposits. And so the circumstance that you see in place today is one that impacts supply 10 years from
now. This is a very good question. Rick, how do you remain calm when you know you are winning big?
Well, it's easier to remain calm when you're winning big than when you're losing big. I would point that out to the questioner. I've done both. But the truth is, I've organized my life in a way. I've been very lucky. I'm 70 years of age. I have enough money set aside that no matter what, my family's needs are met. I speculate on the margin. I have money set aside that if I lost all of it, it wouldn't change my decision as to what to have for breakfast. When I do win big, I scrape that money off the table, or some of that money off the table, and I invest it rather than speculate with it. I've also done this for 50 years. And I'm not trying to say that the emotion is gone, but I've had literally scores of speculations where I've enjoyed tenfold gains. I've had even more numerically where I've lost 50%. The lovely arithmetic of speculation is that a tenfold gain amortizes 20. One tenfold gain amortizes 20, 50% losers. And it's that reality and the discipline to stick with things I understand, so that if I make money or I lose money, I understand why.
Yeah.
That allows me to be as calm as I am. I think the fact that I'm calm allows me to make the money, by the way.
Yeah, that's
making money requires time and compounding. And most people, for whatever reason, don't have the patience to make very much money. When I look at the 10 baggers I've enjoyed, I think I've told you this on your show before, they've required an average of 6 years to give me tenfold increases in my investment. They have often given me tenfold increases in my investment after I've sold enough that I've recouped my basic cost for free. I'm talking in a gross sense. But well more than half of them have experienced, have shown me 40 or 50% share price declines during the period in time between I bought them and the time I monetized them. If you don't have the patience and if you don't have the courage of your convictions, speculation is not for you. It isn't something that you're going to be able to compete in against a guy like me.
Okay, next question from my follower. What are the Rick's top 5 best ranked uranium companies currently?
That isn't information I'll divulge. At some point in time, I may go into the subscription business.
Okay.
Right now, I teach people how to fish for free. Someday, I may sell fish.
Okay. Fair enough, Rick. Fair enough. Okay. Next question. What does Rick think about Thrilion Energy?
I don't think about it. It's not one I own. And as a consequence of that, it isn't one that passed my initial review. I've reviewed again, so I don't know enough to comment.
Okay, next one.
Well promoted.
Well promoted, yeah. One of my followers saw the interview with George Glazier. George is the CEO of Western Uranium and Vanadium, and I did an interview a few days ago. And he's curious about your opinion on the Western Uranium and Vanadium. And he said that you stated recently that you're even more bullish on vanadium than uranium, given the current price of vanadium. Is that still the case, Rick?
It isn't true, but I am excited about vanadium. I don't own Western vanadium and uranium because it's a series of small deposits, and I don't like small deposits. I think the uranium price will do well, and I think the vanadium price is likely to do well too. It could easily take vanadium 3, 4, or 5 years to do well. It's ironic that at age 70, I have much more patience for 5-year terms than I did when I was 25, when I had more time on Earth. Vanadium could easily be derailed by a global recession and a decline in demand for high quality steels, particularly aviation steels. If it doesn't occur, I think that demand for high quality steels continues to increase and that the utility of vanadium in those applications increases. Mm-hmm. I also think that there's a good possibility, perhaps a probability, that one of the winners in terms of technology around utility scale batteries will be the vanadium redox battery. And if that occurs, then I think that you see vanadium really, truly reprice. So I'm attracted to both vanadium and uranium. I think in the event that I'm right, that the story, the narrative around Western vanadium and uranium becomes extraordinary. For me, my ability to invest in it or speculate in it will always be constrained because of the size of the deposits, the fact that they're relatively small compared to the type of deposits that I like to speculate in. Mm-hmm, mm-hmm. Okay. High certainty, low real upside. I think the speculative upside, the narrative upside is huge, but I don't have any faith in my own ability to understand the value of a narrative on the investing public, whereas I have a pretty well-developed ability to understand probabilistic net present values, which is how I invest.
Okay. Rick, what positions going forward in the energy sector as a whole would you say that is a good place for people to begin looking at?
I think that people need to decide on how much they want to make as a sector bet first, because I don't think there's a one-size-fits-all answer to that question.
Agreed.
There are some people who are beta investors. They understand the uranium thesis and they think that uranium investments will outpace the market as a whole. For those people, why risk the beta bet? Buy spot physical uranium, buy Cameco, and perhaps buy the ETF, URNM, and don't take any time doing the fundamental work in the companies. Buy the sector, relax, make your money, drive on. There are other people who want sector alpha. They don't just want to beat the general market, they want to beat the uranium market. Those people will have to work. What I've learned is that the return on work is proportionate to the size of your portfolio. Small portfolios can't afford large amounts of work. I've told your listeners on your show before that the amount of time that you should spend on your portfolio is 1 hour per position per month. If you own 15 positions in your portfolio, it means that you need to spend 15 hours per month on your portfolio. If you have a $30,000 portfolio, this isn't worth your while. You're better off spending the 15 hours per month working at something that you're good at and making money. If you have $1 million portfolio, that's very different. Mm-hmm. But a $30,000 portfolio, a $50,000 portfolio, that portfolio should own a little bit of the Sprott Physical Uranium Trust for the bottom line beta, a little bit of Cameco, some URNM, and if they're speculative, the Sprott Junior Index. In other words, own the ETFs and then spend your life in a way where you know you're going to make money that's pleasant for you. I used to feel very different. I used to feel that the ETFs were inelegant solutions because you pay somebody a fee to own some stocks that you wouldn't normally want to own generally or whatever, which are in those portfolios. I feel for investors under the sort of $100,000 mark, or particularly under the $50,000 mark, that there's a lot to be said for buying the ETFs and using the time which you would rationally spend on your portfolio engaged in activities that you either enjoy or are guaranteed to make you money, like your job or your side hustle.
Okay. Rick, two more and then we are done. How do you see higher uranium getting junior explorers into production? Utilities won't sign contract with a tiny exploration company as not a reliable supplier. So do the likes of Chemical and Kazatomprom have to hoover up these juniors, or do you see mid-sized companies forming?
I hope that you see lateral mergers because I'd like to see more competition for those assets. I think, however, that the big companies will have a lower cost of capital. And to the extent that the lower cost of capital doesn't go away, that the big ones naturally will buy the smaller ones. The only thing that could get in the way of that would be if we develop better financial products, insurance products, so that great big balance sheets, Industrial Commercial Bank of China, Trafigura, people like that could lend their balance sheets to the juniors so that the juniors could become synthetic credit counterparties in the term market and hence have the ability to go into the project market as credit quality issuers. Right now, financing mine construction, if you are a non-investment grade credit, is going to cost you a minimum of 16%, whereas the credit quality issuers are attracting that same capital at 8%. That's too big an arbitrage for the juniors to stand a chance in the near term. If they could reduce that by paying 1.5 or 2 points in credit enhancement, if that product existed, so that their cost of capital became 10% as opposed to 8%, or compared with 8%, or as opposed to 16%, then you could see the middle expand.
Okay. Final one, Rick. If you had to pick one between Denison and Deep Yellow, which one would you choose?
I wouldn't do it. Not the question I can answer, because there's no one size fits all answer. You know, there's 8 billion people on Earth, which means I'd need to know 8 billion individual circumstances before I answered the question. I own more Deep Yellow because I bought it extremely cheaply, and I have a relationship with John Borshoff that goes back 20 years that gave me unusual confidence in him. But that's just me. What Denison is doing, if their ISR technology works, is lower risk. Notice I said if it works.
Yes. Rick, as always, I enjoyed listening to you, and thank you on behalf of my followers for sharing your knowledge. It was a great chat. Thank you very much, Rick.
I've always enjoyed the process. Thank you for inviting me back.
Thanks. We will be definitely in touch, and let's catch up sometime soon.
Thank you.